half and I flipped it in a double.
Hey guys, welcome again to our podcast series BA Cast. My special guest today is my brother Tom Hines. Welcome to the show, bro, and thank you for being here. So I'm looking forward to have a great podcast and let's share with everybody out there about your trading.
Glad to be here, mate. Nice to speak to you.
Great, bro. So let's begin. As usual, and as you know, people want to know you. So tell us a little bit about you. Where are you from? How old are you? And what do you do besides trading?
Well, I think the accent gives quite a bit away. I'm from Liverpool in England. I'm just turned 34, and my hobbies and interests besides the trading world are weightlifting, reading, spending time with my girls, my little family, and I currently am employed in the chemistry industry.
Oh, interesting. So, what do you do in the chemistry industry?
Prepare precious metals for acidization and prepare them for the lab techs to complete their work.
Great. So you studied that?
Yeah, basically, I spent a small amount of time learning the industry, and I was took on basically started from the bottom and learned on site.
Oh, it's interesting. First trader that comes from that industry. Usually, there are many students, or the usual 9 to 5 work and things like that. No, not something special like a chemist industry.
Yeah, I come from a
Mhm.
very working class background. It's very much based on, the city of Liverpool is hard work, graft, toil. I was in the building industry for 8 years.
Uh-huh.
I also spent time in warehousing, labouring, automotive industry as well. So I come from a very hard-working, working class background, and I've always been interested in self-education to try and learn how to invest from an early age. And it ultimately led me to learn the currency markets. So, yeah, humble beginnings and still very humble.
Great, bro. So moving to what we are here for, how did you get involved into trading?
I was always, like I said before, I've always been interested in learning to invest. It's always fascinated me. And as time has gone on, I started to find study material on the internet. Baby pips, as many of your listeners will have been well aware of, baby pips was the go-to for me at the beginning. And from then on, I've just managed to find other traders and other ideas, and I've just tried to educate myself from then on.
Okay, you mentioned baby pits. I come from that as well, from babypits.com. It's maybe that's because I'm 34 as well as you. So
All right.
we come back from the old baby pits. So
All right,
it's
yeah.
great. It's great, to have some things in common. So yes, go on.
Do you know, baby pips, I think it gets a bit of a tough time. Retail traders specifically get a tough time.
Yeah.
I still believe retail trading has a lot to offer. I still believe that people can be profitable. I'm sure there is profitable traders who use retail patterns. It's how you develop into a system and how your psychology is that makes the difference, I believe. I learned quite a fair bit from baby pips. Still quite grateful for the lessons and notes that I took from that website. So I'm not very quick to jump on retail bashing, but it does serve a purpose to a point. But I also would state that I think you will get to a point in that development where higher learning, higher trading institutions do need to step in to increase your market knowledge. But baby pips is a fantastic beginning, I believe.
Yes, it's like a foundation.
That's the word I was looking for. It's a very good foundation point.
Yeah, that's the same thing that on the previous podcast I talked with with Ivan that it's not about if you use, let's say, Wyckoff or trend lines or any other system. Usually, the system itself will work in some environments, but usually,
Agreed.
exactly. But usually, the problems comes from the trader, not the system.
Totally. Absolutely.
Okay, so now that we talk about trading systems, you're a very well-known trader for using the high time frames. So, based on that, how is your day? I mean, how do you approach the markets with that view of the high time frame?
For me, it's extremely important to get a institutional aspect on the delivery of price. And for me to do that, I believe from my point of view, the daily to the 4 hour market structure should be where your intent lies, especially if you are a day trader looking to get in and out the market in the day. I've been quite comfortable to hold trades for 2 days, but I do consider myself a day trader. But for me to take a trade on a 15 or 5 minute chart, I must have my daily and 4 hour structure levels in place beforehand, and that is an unbreakable rule.
Yeah, I've seen that when you share your shares that you focus a lot on the high time frame. Let's say key levels, which are
Yeah,
very very important because usually the high time frame will like say have a greater impact on what the delivery of price will be.
yeah. If, for example, I can only speak from personal experience, but if you have a structure high and a structure low on a 4 hour chart, and you see a strong candle close above the structure market high, I automatically have a bullish sentiment when a key level is returned to. So, for example, as you well know, we talk a lot in our group. It's if I see a structure high broken, I already look now for a type of block that would offer propulsion in price when price returns to it. But what needs to happen for me to be comfortable with longing a pair is I need to see a strong candle close above the structure high. It can't be a wick, because for me a wick indicates that stops have been taken to turn the market back to the downside. So the key for me and for anyone listening who might like that type of structure is I would strongly suggest that it's a strong candle close that breaks the structure, not a wick. That would be my point.
Yeah, exactly. As you mentioned, when we usually see like a wick taking like the previous high, basically it be like a manipulation price.
Yeah,
Because as many of us know, the volume of the trading is in the body of the candles, not the wicks. Usually they use the wicks for
absolutely.
manipulation. So yeah, it makes sense. So after it breaks, you wait like for a specific pattern maybe to happen before longing.
Oh yeah. If, for example, step one, we break structure to the upside with a strong candle close, price will most likely return to a previous area of buying at a discount level if we're bullish. I believe that's correct terminology, and a premium if we're bearish. I want to be getting in at a discount price, so my area of buying will have to line up where the discount prices will sit. So price may return over a course of a day, maybe a few hours, and then I have my higher time frame confluence confirmed to look for longs in a kill zone.
Okay. So you wait when the price returns back to a key level in discount you mentioned, and then you basically wait for any other confluence that might be in that key level or nearby, right? To then placing a trade.
So now we're going down to 15 and 5 minute chart, yeah. what I tend to look for is, can we take previous day low? Can we take that and break structure to the upside if we're bullish? That adds extra confluence, because we all know that a lot of liquidity sits below previous days high and low.
Mm-hmm.
So if I can see previous days low in a bullish scenario get taken, and we break structure on a 5-minute chart violently, so we can see sponsorship take place, that is my whole confluence in all boxes have been ticked. I can look for longs then.
Okay, great. So right now we've mentioned many institutional concepts. So I think that some of the community will don't know what we're talking about. But what other concepts did you study besides from retail?
All right. Well, if we want to take it back when I first began,
Uh-huh.
I can tell a couple of interesting stories about my beginning.
Okay.
I started out on baby pips, as you do, and I put money into my first account after doing a couple of months of revision study, and I put a small amount of £150 into a trading account, and I traded my first ever trade, which was an ABCD pattern against the trend line, bearish, and I made £35 profit on my first ever trade, and I thought I was the best trader in the world. That same week, I blew the whole account.
Wow.
So that was the first introduction to real life trading. And then I've got to admit to the listeners as well that a small loss like that did affect me early on, very much so.
Mm-hmm.
And it's amazing how much psychological effect a loss or a blown account can do. Because my next venture into the live account world came from, I got quite lazy and I searched out signal services on Instagram, the Lamborghinis, the Rolexes, all that. I was asked to pay a fee and put £250 into an options account, and I ended up getting not one correct signal and blowing the full lot. So that was my first two introductions to losing money in this market.
Yeah, it seems like it's the usual, when we all begin in this business. You have to go through tough times, then emerge,
Absolutely.
and to really, let's say, get back on track. Because as you mentioned, when you lose an account, it really impacts your psychology a lot. So many people probably loses, I don't know, $100 or pounds, and maybe it won't affect them that much. But there is many people that will go like all in, like say 5-10K, and that really will hurt them, because many people will the common error is that they will take even their lifetime savings. So when you get into trading, it's not a game. You need to be
No,
very responsible with that.
so true. And the psychological scars from people who try to hit the jackpot with signals
Mhm.
or go all in, like you say, is they probably don't recover, in my opinion. I don't think they do. And if you can start small and observe the process that's taking place, I think you'll be well more equipped in the future to understand that losses will occur, and it's how you deal with them which will make or break it. And I'm still learning them lessons now. I'm not by any means perfect. I still get emotionally agitated by even demo losses, so I've still got a long journey to go as well.
It's a long run. It's like they say, it's not a sprint. It's a marathon. So
Yeah,
for new traders, we know that it's easy to get caught with the get rich quick. So guys, it's important to don't get into that. Everything takes time. So go easy. Don't go like crazy. Okay, I'm gonna be rich in 6 months. No, it will never work like that. So it's important for you to
It's a very good.
understand that.
Oh yeah, and I think something that stuck with me is I read a book by the Turtle Traders, and I think his name was Richard Dennis, who got them all together, and he said something fascinating that I only have just begun to understand later on in the journey. Is he said that he could put a 80% successful trading strategy into a newspaper with every rule that's needed to be followed with an 80% success rate, and the majority of people will still lose money. And I didn't understand what that meant. And as time has gone on and I've exposed myself to market conditions and emotions, I totally understand what he meant and how important that is to understand early on in the journey. You must understand what he's trying to say early on is that you could have a extremely successful percentage of and strike rate with rules, but if your emotional capacity is compromised by one loss, you will not do well, even with an 80% successful strategy.
Yeah, exactly. It's a tough game. Okay, so very insightful information we talk about. Now, what would you advise the guys out there to improve their trading career?
Most importantly is I believe that almost every trading plan can be profitable with enough statistics and back testing behind it. But please spend more time building your emotional strength. No one will listen to that. No one will pay attention to that comment because they want to just trade. Don't make the mistake I've made and think that you need to reach full on perfection with a trading plan. You can have a 40% strike rate and still be profitable at the end of the month if your emotional psychology is correct. Spend more time working on your mindset than your trading plan once you've already achieved a edge in the market through back testing and forward testing. That would be my most biggest forward placed advice for anyone.
Yeah, it makes sense. Your psychology needs to be really good, in good condition, because it's a mental game. Every day you go into the markets, it's gonna be like an inside battle in your head.
Absolutely.
So
Absolutely.
if your mind is like very focused in what you have to do, in respect your rules, respect your risk, it's gonna be difficult, even though you follow your rules. But let's say that the journey will be smoother for you, even though you lose. Because as you mentioned, if your system, if your method says, even though you don't have a, let's say, a higher win rate, let's say, I don't know, it's 40% maybe, even though it's that low, your system says you can be profitable. So that's what matters.
Yep. It can get you out of trouble.
Don't focus on getting like 90%, 85%. You don't need that. If you have a system that in the long term shows that it can be profitable, it's okay. You know, people think that they need the holy grail, the 99% win rate strategy, things like that you see every single day in YouTube, and it's not like that, guys. You need to understand that.
You'll probably agree with me. If you jump ship to a new trading plan every month, it will work for the first few weeks and you'll get great results. The initiation process always starts like that. There will come a downtime when the system doesn't work. You either stick with it and persevere and take time to reverse engineer what's going on, or you can keep jumping from plan to plan, get that little boost of wins that make you feel great, but when the eventual inevitable downturn comes, you'll end up jumping ship again. It's not going to work. You can't jump ship to a trading plan every month because you've took a week full of losses or 2 weeks worth of losses.
Yeah, it will
That's where
turn.
character comes in.
Yeah, I was going to say that if you do that, that you mentioned that you jump from one system to another, it will turn you into a vicious cycle. You know,
Mm,
that okay, this system is not working, so you think that the system is not working, but it's not like that. Maybe you are going through a losing streak, and then you simply go on with the next one, and then your mindset is already negative, you know, like in a negative state. So you go with
yeah,
that psychology, and even though you have, let's say, I don't know, an 80% system, you will fail again. You can be sure of that. You will fail again because it's not about the system, it's about your head, your psychology.
absolutely.
So once
Like, for
again,
example,
just go on.
if, for example, you've took a really bad month, and the new month begins, and you've already built a emotional, frustrated mindset to your system, instead of having full focus of the new trade that's been placed in front of you, that your system has recognized, fear will stop you from taking this trade when really your whole focus should have been on the trade plan itself again. So it's very important that during the massive downturn in confidence, the run of losses, you still have the character and the discipline to take the setup again. You must continue to take the setup.
It's like that. We can say like you should do this and turn the whole trading thing into a good habit. You know, if you
Mm,
have a set of rules, follow them always, or at least I don't know 90% of the time. So if you say you have like okay, risk per trade is I don't know 0.25%, then always take the trades like that. If you have like a parameter, say if I lose one day 2 bullets, or I have two losses, then I stop trading. I close the charts and I continue with my life. I go to the gym, I go to college, I do something else,
yeah,
but I disappear from the charts, and then the next day I go again into the charts and follow the same rules, the same plan.
yep,
If you do that, you will build a good habit, you know, because even though you fail, you know that in the long term it will work. And the important thing is that, as you mentioned before, if you put the time and the work to study, to back test your system, and it shows that in the long term it's a profitable system, that's perfect. But you need to follow your rules. It's important to have a plan,
absolutely.
to have your rules. If you have that in place, do that really, really strictly for say 6 months, 1 year, and you will see
Mm,
that you will have some good results. Even though you can have maybe 2 3 bad months, the positive months will put you up. Okay.
agreed. And I would add to that, everything you've just said should be followed by everyone who listens to this. Have a tick box system in place before the beginning of each trading day. And if a trade aligns, but one of your boxes can't be ticked because it hasn't been met, one of your rules hasn't been met, have the discipline to not take the trade. I've done this so many times where my daily rule has been met, the 4 hour rule was met, the 5-minute rule didn't break structure, but I dived in, got stopped out, got frustrated, blamed the strategy, and when you look back on your journal, you'll realise that it wasn't the system that caused you to lose. You lost yourself because you didn't follow the rules.
Mm-hmm.
All boxes need to be ticked before you enter. A lesson I'm still learning, but a lesson that traders should take in very early. It will help. Have a tick box system in place.
Yeah, that's a great way to go, because as you mentioned, you will after you take the trade, if it's a lose, probably when you go back to your journal, you will notice that, oh, okay, daily and 4 hour were okay with what I have to wait, but the 5 minute didn't do this that I was
Yeah,
that I needed to wait for. So then, based on that, with the next one, when happens just like that, you will know that you need to wait for that 5 minute rule to be completed before entering or taking a trade. So it's
yeah.
it's it's like a job, like when you're working. I don't know. Let's say, I used to work uh, 14 years ago. I used to work for an airline, in the airport, and
Mm,
I had to attend the flights in the gates, before
yeah.
they get on the airplane. And when a new plane was approaching the gate, I had to move the bridge
All right.
that gets attached to the airplane. So basically, that machine you had to follow a series of steps. So you have like buttons, and you had like a joystick to move forward, to move down, you know,
Mm,
and you had a series of steps from, let's say, 1 to 10. If you were in step 7, and then the 8, I don't know, you had to press like button A, for instance, and you pressed, say, button B instead, then the machine would stop working for security,
yeah, I
because
see.
because you had a series of steps that say, okay, step 1, you do this, step 2, you do this, step 3, you do this, and you had to follow all those steps to really accomplish that task of attaching the bridge to the door, to the airplane door. So it's like that. If you have a system, if you have some rules, you have to have them in place and follow them one by one after another, from A to C. But you need to follow the rules, the steps. That will help
Yeah,
you a lot.
we've we. If you think about it, we're very much built as humans to be very bad at trading, aren't we? Because we are humans built with emotion. It's inbuilt with us. So this type of game we're involved in, we're not biologically and psychologically built to deal with what's needed. So the people who do make it in this game must be applauded for managing their emotions, which is something that's natural to humans. So it's a lot of work. It's a lot of work. And like I said before, having a strategy with at least 6 to 9 months of statistics proven, not so much every month needs to be a winning month. That doesn't exist. But did your trade system get you out of a bad week with one win over 5 losses? If you can have a back system that shows that you can, then that should be your primary focus every weekend before the Monday Open, because your system has a back test history of getting you out of trouble and leaving you profitable. Should be more reason to take time out, meditate if you're into that sort of thing, read self-development books on psychology, and focus on improving that aspect of your game, because your only issue if you are profitable over 6 to 9 months is how you manage the day-to-day to and fro of the market when a trade goes against you. When you were maybe 40 pips up and next thing you check the market and you're only 5 pips up, but the market did run your way. You know, your psychological issues are the problem. It's not the trading system. So keep your focus on your mindset when you've proven that you've got an edge in the market would be my advice at the moment.
Great tips, bro. Now, let's move on to some questions we received from our Instagram community. The first one, it's about mistakes. We already talked about that, so I'm gonna continue with the next one. So, one follower sent us this one. How long did it take you to move from demo to live funds? That's a classic question.
That seems to be the big question, isn't it? And I don't think it's an important question.
Exactly.
It's for the sake of answering it.
Mhm.
I think it was 8, 9 months, and that's when I put that. I told you the story earlier. I put a couple of £100 in an account, won my first trade of £30. I was walking around like I was the greatest trader in the world, and then I blew the account the same week. So I dived in without proven 6 to 9 months of an edge, and I got lucky and won a simple ABC setup, which could have been in a trending environment, which I just managed to get lucky enough to get in on. And the trades that you win when you don't follow your plan are more harmful to your development than losing a lot of money following your plan.
Yeah.
Because you think you'll get lucky every day, and you might get lucky a couple of times. You might win big a couple of times, but over the course of the process, it will work against you. So always ignore the random chance gamble trades that you win, because they serve no purpose whatsoever.
Okay, let's move on. In regards to building up confidence, again, let's say if you had a losing day, a losing week, or a losing month, what would you recommend somebody to build up again confidence?
Well, number one, don't jump to another system. Number one, never jump to another system, especially if it's proven to have you've got an edge, as we spoke about before. Number two, lower your risk, lower leverage, and ask yourself: are you being honest with yourself when you take a series of trades? Are you not ticking off the boxes for the rules? Because the chances are, as I found out, and I still do, I've probably not followed all my rules and haven't ticked all my boxes off because of emotion. So it's not your system that's letting you down if you've got proven history of an edge. It's your emotional aspect to needing to get a win. You're looking for that serotonin boost again. You want to see the blue numbers on MT4 or MT5. You're sick of seeing red numbers. You need a boost. You're driven by emotion. I would say go back to the drawing board, read your journal. Are you ticking off all your rules? The answer is most likely going to be no. And lower your risk and carry on. You must carry on taking the trade setups when all your rules are met, regardless of the situation you're in.
It's like that, bro. It's like that. Well, we've talked all these podcasts, you know. It's not about the system, it's about you, always. So, guys.
You are the system.
Yes, continue.
Yeah, I just said in the end, the edge is you, isn't it?
Yeah.
You are the edge.
Exactly. And it's all about your psychology and the rules.
Yeah.
If you follow the rules, even though you fail sometimes, in the end it will go fine. It will go fine. You will have your great months, you will have bad months, but in the end, you will see how your equity curve goes up and on smoothly. And if you're able to put the work on that, you will be successful maybe in less than a year, but usually try to focus in the long term, 3 to 5 years. It's much better to expect uh, a lot of results maybe in 3 to 6 months. So don't focus in the short term. Always focus in the long term. 3 to 5 years
Yeah,
is a good period.
I would. Yeah, don't put excess pressure on yourself in a very pressurized environment.
Mm-hmm.
Give yourself a chance to learn. Give yourself permission in your own mind to fail. Allow yourself to fail, and that's where lessons occur in failure.
Yeah, it makes sense. And as we've mentioned all this time, after some time, you will realize that all your losses came from not following the rules.
Yeah, true. That very true.
It's always like that. And in my case, usually I try not to trade, let's say, Sunday opens. I've done it before, and I have some setups that usually work, but I try not to because I know based on several years now that, let's say, almost 85 to 90% of the time I will be wrong. So usually
Yeah,
Sunday open and Monday, let's say London, I try to avoid that because I know by statistics that is not good for me. So why should I go and trade that day if I know by a proven record that I'm not good at? I should focus
yeah,
on the days that I have a better chance, high odds. Always look for that. When you have maybe like 6 months or 1 year of trading and you have a journal with you, that's a great advice to have a journal. If it's possible for every trade that you take, or at least try to do like a weekly journal or of how you felt that week,
yeah,
that will help you a lot because you will go back to your journals and you will learn from those mistakes that you made in the past. So in the
yeah.
future, you don't get in the hole again.
I prefer to. I think one thing that maybe might benefit people is I like to take screenshots and have a digital journal on my computer, and I do have ones. I have many screenshots of trades that I've lost,
Mm-hmm.
and it gives me the opportunity to look at them and say, well, what did I do wrong in this situation? Or did I follow my rules and just get stopped out, which happens. That happens to everyone. Most of the time, I find myself looking back, wanting to kick myself because it turns out that I didn't follow a specific rule and the market stopped me out. So it's important that you journal your failures because you may come across something in the near future that you learn a valuable lesson because you keep making the same mistake.
Mm-hmm.
You might look at back and go, why do I keep making this same mistake? And your journal might have the answer to that question from a previous experience. Maybe you got greedy. Maybe you got scared and didn't have the stop loss where it should have been. Maybe you took profits too early when your strategy said you shouldn't until maybe 2 hours is one or 3 hours is one. You will find the answer in your previous failures. So I would say to people, journal every trade, win or lose, how you felt during the trade and what did you do wrong. Because the answer to a future loss may sit in the previous losing trade.
We usually humans we learn from our mistakes from our fails. So as you mentioned, it's important to go back and not look on the winners, look on the losers and study that. Study
Yeah.
what happened, why the trade didn't pan out. That will help a lot. And we're saying this not because we are the greatest traders and that maybe we're making a lot of money. No, because we've gone through that. So it's a way to help the new traders to avoid those mistakes and have, let's say, an easier path.
You know, I'm just speaking hypothetically.
Mm-hmm.
You could have a system that says I'm going to trade every bull flag that occurs after a 1 hour market structure break. Okay. The higher time frame rule is, did the market break structure on the 1 hour to the upside? Tick it, yes. Did the market create a bull flag on a 30-minute or 15-minute chart? Yes. Did it break and retest? Tick, yes. That could be a system. Okay. If the bull flag wasn't broken to the upside and didn't retest, then you can't tick off the rule that it did. So unfortunately, our emotions would step in and go, I'm going to get involved anyway. Or the market structure wasn't a clear candle close above the structure and didn't break it. It was a wick. And on the retracement, you thought you could trade a bull flag. And it turns out that the market was only seeking liquidity to break structures to the downside. You get stopped out because you didn't follow your rules. But you knew that it wasn't a clean structure break, but you wanted to take the trade anyway due to greed and instant results. So you've got to take responsibility for not following your rules. It's as simple as that.
Just like that, bro.
Yeah.
Okay. It's been a long one, this podcast, but it's been very, very insightful. I know that.
I've enjoyed it.
Yeah. I hope that everybody out there enjoys this one. Take the advice that we're giving. Follow your system, follow your rules, guys. It's important to do it like that. Don't focus on the finish line.
The process.
Yeah, the process is important. Try to grow every day.
Yeah.
Okay. Thanks again, mate. I want to give you a big thank you, for sharing all this knowledge and open up with us. It's been a great time.
I've enjoyed it.
And I know that everybody out there will really appreciate that. Any other thing that you want to add, maybe?
Just give a shout out to our little group that we've got. Been a part of it for a while now. And I've picked up so much knowledge from you guys. It's a great little community. And I think it's important that you surround yourself with like-minded people. So big thanks to all the guys who will hopefully listen to this. You all know who they are. And yourself for creating a great podcast. I think this is going to do big things.
Thank you, bro.
The knowledge that's going to be dropped. You've had some wonderful traders on this podcast already. Some good people who have got great futures. So keep going with this because this is going to get good. It's going to be interesting. It's going to be insightful and people will benefit from it. And in regards to trade, and again, I don't want to repeat myself, but for everyone who might listen, just get your edge in the market. Prove that you've got an edge. Once you've done that, focus intently on your psychological situation and work on it daily. That would be my last piece of advice. And thanks a lot for having me on because I've enjoyed myself.
Thank you, mate, for being here. So, guys, that's all for today. If you want to contact Tom, go ahead and check below in the post where you will find all Tom's social media accounts if you want to reach him. We hope you enjoyed this one and stay tuned for the next weekend episode. See you.